There's a silent agreement in the modern financial world, a multi-trillion-dollar assumption that no one is allowed to question. The entire middle class has been convinced that the safest place to store their life energy is the passive index fund. They call it set it and forget it, but what they are actually building is a massive correlated liquidity trap. When you buy a broad market fund, you are not analyzing businesses. You are blindly allocating capital based on size. This dynamic has consolidated corporate voting power into the hands of three massive asset managers who oversee the entire market. It is a system of automated centralization, where passive capital flows dictate the share price rather than fundamental economic value. This creates a massive structural inefficiency, funding the largest companies regardless of their actual performance or their true fundamental valuation. We have removed the price discovery mechanism from the market, and independent price discovery is the immune system of healthy capitalism. The architecture appears incredibly stable while the capital is flowing in, but the mathematics of a passive bubble are highly asymmetrical. What happens when the demographic shift occurs and a generation of retirees begins to systematically withdraw their passive investment capital? The safety net you rely on is structurally fragile. In a severe liquidation event, the exit door is mathematically too small. If everyone is a passive holder, who is the active buyer during a panic? Market liquidity simply evaporates from the system. You possess paper exposure to an index, but you possess zero sovereignty over the underlying assets or the management decisions. This is the ultimate triumph of financial homogenization. They convince the public to surrender voting rights for the illusion of safety. But look at the apex players. Ultra-high net worth individuals do not store generational wealth in correlated passive public market investment vehicles. They operate in private equity, hard commodities, and direct ownership. They demand control, asymmetry, and absolute authority over their investments. The retail investor buys the abstract average of the economy. The sovereign investor buys the specific mechanisms that run the economy. Passive investing is a wealth extraction tool disguised as a savings account, feeding the management fees of the centralized asset allocators. You are standing on a frozen lake of liquidity. It holds your weight today, but the ice is getting steadily thinner. The alternative requires effort. It requires moving from a state of financial unconsciousness to aggressive, highly active capital allocation strategies. You must seek assets that cannot be manipulated by algorithmic sell-offs. Assets that possess intrinsic utility and absolute physical scarcity. If you do not control the holding, you are a passenger. In a correlated market, all passengers share the exact same fate. The storm of deleveraging is approaching, and when the paradigm shifts, average returns will not protect you from a systemic drawdown. Protect your capital by stepping outside the parameters of their game. Real wealth is built on absolute control and tangible value. It is time to analyze the zombie companies, corporations kept alive purely by the blind, continuous flow of index fund capital. These entities do not innovate or produce genuine profit. They survive simply because they are permanently listed inside the major index. Your retirement savings are actively funding inefficient corporate structures, directly diluting the overall productive capacity of the entire global economic engine. By centralizing capital allocation, we have inadvertently recreated a command economy that is cleverly masked as a free market trading system. The algorithm does not care about debt-to-equity ratios. It only cares about matching the capitalization weighting of the target financial benchmark. This practically guarantees that you are buying the most overvalued assets at their absolute peak, right before the economic cycle inevitably turns. Furthermore, consider the undeniable demographic reality. The baby boomer generation currently holds the vast majority of this passive, paper-based market wealth. As they transition into retirement, their portfolios shift from accumulation to distribution, triggering mandatory systemic sell orders across the entire board. The system relies entirely on a constant influx of new capital from younger workers to absorb this massive, outgoing wave of liquidity. But younger generations are carrying historic debt loads, meaning the underlying math of replacement liquidity fundamentally breaks down under the surface. When the selling pressure outpaces the buying pressure, the grand illusion of passive safety shatters with terrifying and absolute, unforgiving speed. Wall Street built this vehicle to harvest management fees efficiently, not to protect your family during a prolonged, brutal economic contraction. The banks have transferred the risk of market collapse entirely onto your shoulders, wrapped in the comforting, deceptive language of diversification. But true diversification is not owning 500 highly correlated stocks. True diversification is owning entirely different, fundamentally disconnected asset classes. You must hold specific assets that perform exceptionally well when the paper markets fail. This is the essence of a defensive posture. look to tangible scarcity. Agricultural land, energy infrastructure, and precious metals simply cannot be printed or algorithmically downgraded by central authorities. They require physical labor to produce, anchoring their intrinsic value directly to the fundamental realities of human existence and global energy consumption. You must also invest heavily in your own active capacity. A highly specialized income skill is an asset that yields infinite returns. Your ability to generate robust cash flow independent of the macroeconomic climate is the ultimate, unbreakable hedge against severe market volatility. Stop outsourcing your financial sovereignty to a corporate fund manager who will not lose any sleep if your portfolio drops by half. The era of effortless passive returns was a historical anomaly, fueled entirely by declining interest rates and immense, unsustainable global credit expansion. That era is definitively over. We are rapidly entering an environment that will mercilessly punish the complacent and heavily reward the vigilant. You must immediately become an active participant in your own survival. Inspect the foundation of your wealth and reinforce the structural cracks. Transition your portfolio away from fragile paper promises to physical realities, moving from fractional, blind exposure to total, absolute ownership and control. Build a financial fortress with a deep, defensive moat, perfectly insulated from the algorithmic panic that will inevitably consume the passive herd. The vast majority will stay asleep on the conveyor belt, trusting a system that was optimized exclusively for its own institutional profit. Step off the line, take the wheel of your financial destiny, and navigate the coming storm with your eyes wide open. The absolute greatest risk you can take right now is to believe the comfortable lie that average effort will yield exceptional safety. True sovereignty requires leaving the crowded index behind and seeking out the asymmetric opportunities hidden in private markets and direct asset acquisition. When you hold the physical deed to a producing asset, you bypass the entire centralized architecture of the modern Wall Street casino. You are no longer subject to the arbitrary rebalancing of an algorithm. You dictate the terms, the yield, and the operational strategy. It demands an elevated financial IQ, a willingness to read the contracts, understand the leverage, and underwrite the actual underlying business fundamentals. The passive fund is impossible to steer, but the active allocator operates an agile vessel built specifically to navigate through turbulent waters. Remove your capital from the abstract averages and deploy it with sniper-like precision into sectors that you personally understand and fundamentally control. The elites do not buy the haystack. They aggressively acquire the needles, structuring their portfolios to capture disproportionate, heavily guarded upside potential. Start small if you must, but acquire direct stakes. Fractional ownership of a real business is vastly superior to paper index shares. The financial media is paid billions to keep your money inside their ecosystem, permanently extracting a percentage of your daily labor. Break the hypnosis. Question any financial product that promises wealth without requiring your direct, active participation and strict oversight. There are no shortcuts to generational sovereignty. It requires a ruthless, unwavering dedication to learning the true, underlying mechanics of global money. When the index crashes, the passive investor suffers. The active investor uses their protected liquidity and deep knowledge to buy the panic. Elevate your perspective above the daily ticker tape. Focus on macroeconomic cycles, structural shifts, and the undeniable reality of physical resource scarcity. We are rapidly shifting from an economy of digital promises back into an economy anchored entirely by hard, unyielding, tangible physical assets. Position your wealth accordingly. Be the immovable object when the unstoppable force of algorithmic liquidation rips through the fragile, interconnected financial markets. You are not just investing for retirement. You are building an enduring fortress designed to protect your lineage for the next century. Reject the lie of passive safety and embrace the responsibility of active ownership. This is the only path to true financial independence. We shine a light on the mechanisms they prefer to keep hidden, exposing the true architecture of the global financial game. Protect your stored energy, secure your tangible assets, and reject the illusion of the passive trap before the exit door firmly closes. The real game is played by the active, the sovereign, and the prepared. Do not become a casualty of their automated system. This is wealth obscura. The paper markets will crash, but the sovereign asset owner will remain standing. Class is officially dismissed.